It's that time of the week again where I look at what's going on with WTI Crude Oil. Is it still flying up there towards the moon and towards $100, or is it now due a timely pullback and correction? I'm going to dig into technical analysis to find out. Hello, I'm Stephen Ho, trader and founder of The Stop Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. Let's go straight into some sentiment analysis, and what you're looking at there is the seasonality at the bottom. And at the moment it's just starting to slow down from its bullish run before it starts waning into November, and then starting to pick up again in December, so pretty neutral there. Then we're looking at the commitment of traders above that. The red line is the large commercials, the black line is a COT index of the large speculators, and as I would expect to see, the red line is inverse to the price at the top there, signifying a bullish outlook, and that's also married in nicely with the COT index, which has gone up through that 90 level and is holding extremely bullish. Price trading above the longer 200 moving average there, so all round a pretty bullish outlook in the sentiment. So going a bit deeper on the sentiment analysis and some non-technical analysis data, well, we've got here the rig count from Baker Hughes. I like to look at the US line, and again from the prior count we're up 10, and the change from last year up 261. It's a great barometer to follow for bullish bearishness in the industry, and still holding bullish. And inventory data courtesy of investing.com. Well, it's been worse than expected for the last 3 weeks, and maybe that's keeping the bulls happy. It's very hard to gain any direction from inventories in the longer term, but it's really useful to see spikes or unusual activity in those forecasts, and we're forecast 2.233 million for Wednesday's afternoon's data, so we'll look out there. So the weekly longer term look at the crude oil price from the line chart here, and we can see it broke up through that $75 highs, pushing on to highs that we haven't seen for quite a few years now in the early 80s. The next up Fibonacci level just under $92. A lot of correction space to the downside, support probably around 75 and then 63, but the takeaway here is that bullish trend still continuing. Now I like to use the line break chart, and don't get that confused with our line chart from earlier, for potential reversals in the price. I follow the rules there. Got a 4 break one here, and I use a 2 turn to get into any trades. And if I'm thinking there's a correction due, then currently we're talking around about 81 to 80 as a potential turning point before it goes back down any further. If you're more bearish, like the line break chart, because we can see quite nicely that big minus $40 action back in April of 2020, and since then it's been really one-way traffic. The daily Heikin-Ashi chart, well, if we go to signals bottom right, both still bullish, volatility calming down a bit. That's that red line above that, back to its normal sort of levels, longer term moving average there. Volume above that still reasonably bullish, and if we go straight to the price action, then we had a buy signal a few weeks ago that broke out of those 2 pink lines there, that box setup we have for breakouts, and we are comfortably around the mean of that 2 standard deviation regression trend line, so we could see upsides around into those $90 at the top side of that regression line, downsides late 70s or back to the top of that pink line of the box setup, but still trend and the indicators generally bullish. So the Renko chart, $0.50 block size for some decent price action if you're into your faster term trading. Both signals down the bottom there still bullish. Again, like the Heikin-Ashi chart, we've got that buy breakout signal a few weeks ago, trade above the longer term moving average. Now we can see that the Fibonacci lines that I've laid on there, I've kept them on from previous weeks. You can see we've broken now through that 81.95 level, that's at the 261.8% Fibonacci line. Next upside targets, if it continues to be bullish, 86 area, then late 88, 89. Reasonable pullback space back down to 77, 78, and then into those sort of mid 70s before it might settle down. But overall, again, very bullish on the Renko chart. Well, everything really from sentiment to all the technical analysis is still pointing very bullish. Seasonality just pairing off a little bit, but you can't really argue against the price continuing, and it, more and more I hear $100 mentioned. The chances of that happening increase, but beware of the pullback. The profit takers coming in, taking a bit off the table at the moment, and then maybe a chance to buy the dip. That wouldn't be unexpected. So if we target in on the up and down sides and the signals and entries there, if you're a bit more aggressive, still something good in the upside, 1.3, 2.6 to 1, downside 1 to 1, 1.5 to 1, still some opportunity there. But like I say, overall, you can't argue at the moment against the bullishness of crude oil. So crude oil doing a great job of muscling its way up to $100, looking very strong across the board, but don't be surprised if we see some short-term sell-offs, corrections, as it still tries to push to those highs, or unless some other fundamental change comes in and skews the picture. So if you've liked today's analysis and got your own opinions of where you think crude oil is going, let me know in those comments below. You might not agree with that analysis. Let me know where you think the price is going or not going. And if you've liked the technical analysis in the video, I'll put a link in the description below that you can follow to learn more from. And if you like today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons to get further future notification of content I'm going to produce just like this. And all that's left for me to say is thanks for watching. Good luck with the trading, and I'll see you in the next video.